Creating value, the conversation we're about to have is about unlocking the resources we need to scale that value. Throughout today's sessions, we've explored how ideas are developed, refined, and positioned for success. The next question we are asking is one that every founder eventually faces. And this is the question: how do I secure partnerships? How do I secure funding? How do I get the support needed to scale? So our investor-led panel today brings together professionals who work closely with entrepreneurs, innovators, growth-focused ventures across Africa and beyond. Together, they will share insights on what investors look for and what makes a venture investment ready, and how founders can position themselves for sustainable growth and impact. Moderating this conversation is Jessica Boyfio, who is the Associate Director of the Center for Entrepreneurship at Ashesi University. And she is joined by Yao Brakon Osei-Tutu, who is a Strategic Partnerships Manager at Impact Invest in Ghana, whose work spans across ecosystem development, resource mobilization, and partnerships across public, private, and development sectors. Joining us virtually as well is Johnny Ray Fala, who is Associate Director for the Innovation and Technology Pillar at the Equity Group Foundation, where he leads initiatives supporting entrepreneurship, digital innovation, workforce transformation, and venture growth across the region. Ladies and gentlemen, please help me in welcoming our panelists. A round of applause for them.
Okay. Hi, Yao.
Hello.
Hello, everyone.
I don't know if my mic is okay.
It is working. Just check and see if the mics are working. Pretty excited to have this conversation with both you and John. And I'm just going to dive right into it. I think Day introduced you, but I'd like for you to share a bit more about what you do and the organization that you work with.
Okay.
And then we'll have John do that after you go.
Okay, thank you very much.
Yeah.
So first of all, it's a pleasure to be here. So like he said, I work with Impact Invest in Ghana.
Mm-hmm.
Whenever people hear Impact Invest in Ghana, the first thing that comes to mind is, where's the money? They're like, yeah, we are sitting on. But Impact Invest in Ghana is not an investor, but we work closely with investors, and I'll explain. We are a non-profit that has a mandate of building the ecosystem for impact investing. What does that mean? To increase the amount of capital, okay, the amount of financing that is available for businesses to not just earn a profit. So impact investing is not just earning a profit, but also generate a positive and measurable social and environmental impact. So it's not just about the money. To be able to do that, you need to work with different groups in the ecosystem. So you work with investors, you work with regulators, you work with policy and government, you work with market building organizations, so the ESOs, the hubs, incubators, accelerators, etc. You work with a whole host of financial institutions. So it doesn't take one institution to be able to bring about systemic change. That's why we need ecosystem building. I lead partnerships and fundraising at Impact Investing, but we have programs that are dedicated to investment readiness, etc. And I can speak more about that later.
Well, it looks like you own the entire ecosystem, balancing all the various players. It's pretty interesting, and we'll get more into that as we go along. Johnny, are you available? Can you hear us?
I can hear you. Good afternoon. It's a pleasure to be with you today.
Same here.
I'll dive right in and answer the same question from Equity Group Foundation and really Equity Group Holdings. We are the largest commercial bank operating across East and Central Africa, and we're the most profitable company actually in the region, in the history of the region. And so it's really interesting because we have moved recently from being really a national or local champion of development finance to really a regional institution with reach across borders, that now really focuses on trade and investment into the region. And really, we are setting up and establishing trade and investment corridors all around the world to Africa from our region and then into the SMEs and companies that are operating across the ecosystem. So rather than thinking of us just as a commercial bank, you could really see us as an imminent financier of large-scale development-related initiatives, but also going all the way down to SMEs who are just getting off the ground. It is our history and our tradition. We are the bank of SMEs. And so we are in a privileged position because we are able to convene capital of many kinds, not just on the commercial side for the most mature organizations or opportunities out there, but through Equity Group Foundation, we're able to attract catalytic capital as well. So that's primarily through grant funding. And then as a financier of development work, we're also able to partner directly with DFIs to be able to structure concessional capital, where we have preferential terms and really de-risk opportunities that the market might otherwise say don't look attractive yet to investors. So we can actually play in multiple arenas, starting out with the fledgling organizations out there, and then work all the way over to the other side on the commercial side with the most mature and promising ventures, and are able to invest in those directly on market-based terms.
That sounds great. So on the one hand, we have Yao, who is connected to all the various ecosystem players and trying to get our ecosystem all together to support entrepreneurs. And then we've got Johnny supporting with capital. I do want to ask, do you both find the health landscape as a space of interest when it comes to investment? And a follow-on to that is, when you look at the health landscape in terms of investment, what excites you the most about it, and what worries you the most about it? Maybe I'll have you go first, yeah.
Okay, thank you very much, Jessica. It's interesting you should mention health, because health is one of the prime areas of interest for investors. And we know this because we engage, like you said, various ecosystem players, from development finance institutions to venture capital and private equity funds, to people in policy, etc. And it is one of the key areas. In fact, our program that deals with matching investors and businesses is called Deal Source Africa. And Deal Source Africa has been able to facilitate a little bit over $2 million since it was established for a number of businesses. And one of the businesses in its portfolio that I know they've been able to support is health. Actually, that is into health logistics and materials and consumables. We know that in this part of the world, developing country, certain sectors stand out. Health is one of them. And in fact, Ghana is becoming a sort of health tourism center, because you have people coming from West Africa, sub-region, coming, just in case you didn't know, people coming from West Africa, sub-region, coming to actually seek health. But then across Africa, yes, health is one of the key areas that we have witnessed that investors are interested in.
What concerns you about health in Ghana, in terms of investment?
Investments. Like many other areas, the pool of capital, health is number one, is difficult. Unlike other areas where people just go in for a quick return, there's been a lot of attention, if you know, I mean, with fintech and other areas, because people know that, okay, you build a product, you test it out, you validate, within a certain number of years, you are going to get this return, you are going to get revenue, etc. Health is not like that. Because there's a lot of, yes, there is e-health, there's health tech, but it involves a lot of actual brick and mortar stuff. You need experts, you need the human capital that is needed, because very technical area resources, health workers, etc. And then there's also about where we are in terms of health affordability.
Right.
You know, so the consumer affordability, insurance is still a developing market. Elsewhere, where health insurance is widely available, everyone can afford. Now it's getting better because people are pioneering products like microinsurance. Yeah, but microinsurance, health insurance, yeah. So I would say that. So it's an attractive sector, but it is not. It may not be as easy as other sectors, so it will take investors who really understand what they are doing, who understand the risk, who understand the opportunities associated with that sector.
Great, thank you. Johnny, can we have your thoughts on this?
Absolutely. Well, as you already know, health is wealth, and there's no other way around it. And actually, at a financial institution like ours, what we realized a long time ago was that actually, if people and families experience catastrophic health issues, they are unable to work. And if they're unable to work, they are likely unable to pay a loan. And our core business at the end of the day is in financing and is in lending. And so we realized there was a direct connection between people's abilities to finance their dreams and build their financial futures and their health. And so what we decided to do at Equity was create a franchise model of investable businesses. We created Equity Afya. Afya means health in Swahili. And we created a system of high quality outpatient healthcare centers. We have a network of about 140 centers right now across Kenya, are growing that to 300 in the next few years. And these clinics we actually finance. So instead of taking on an investor relationship, we're actually encouraging doctors to take on a financing scheme where they can come up with 20% of the capital, we'll provide 80% of the capital, and actually work with them through a centralized system, a licensing system that we have, where we're relatively confident that a doctor in a clinical environment can actually cross the profitability mark in 6 months and actually be able to pay off their loan on a really predictable schedule. And so these are opportunities for actually building African healthcare infrastructure with African institutions, African financiers. We also, on the side of the Equity Afya system, decided to invest in our insurance businesses. So as my colleague has just mentioned, insurance penetration remains critically low in high need environments. And we said, part of our mission must also to be able to provide affordable healthcare insurance for individuals. And so we've got a license, we offer that, and we're working our way into that micro insurance space as well. So for us, we actually see a massive opportunity in the healthcare space, and we sincerely believe in investing in it. And we think it's a critical piece of infrastructure you have to address first before you can actually get to wider and larger development related conversations. So we're very bullish on it. We'll be getting into pharmaceuticals in the near future. We'll think about on the ground production and facilities that are related to that and supply chains. So for us, it's only an area where we're going to continue to grow our investments and continue to lend and finance in this space.
Sounds great. So what I'm hearing from both of you is there's interest in investing in health. There's real opportunity that can be explored. And of course, we've addressed some of the challenges that exist. Johnny, I'm going to stay on you for just a minute. So I know that the Equity Group Foundation sits at the intersection of philanthropy, development, enterprise. You've mentioned, lending, and you're giving lots of capital out. How do you decide when to use a grant versus a loan versus an investment for a given venture? And I'd like for you to think around it in terms of the various stages that we have here for health ventures, right? So think early stage, growth stage. When do you make the decision of, we're going to give you a grant, we'll give you a loan instead, or we'll commit millions of dollars into your venture?
Excellent. Good. And I'm glad you mentioned again, because again, we cover that whole capital stack. And so we have to have really tightly controlled and well understood systems internally for being able to make decisions on this front. And so first on the catalytic capital side, that is your ideas phase. That is your R&D phase. If you are pre-revenue, if you haven't yet crossed the profitability mark, our entire job through Equity Group Foundation is to de-risk you as a potential client in the future and also capacitate you. So what we do is we find and we go get grant dollars specifically for the purpose to find promising entrepreneurs and be able to de-risk them through the catalytic capital, and then also be able to capacitate them. It is not until an entrepreneur has gone through a process with our enterprise development team, for example, that we can even authorize or issue a loan or financing at a small level even for an emerging SME or venture. Of course, then as you work your way up, we're looking at really milestone-based activities for being able to pay off successfully a loan, to be able to access additional capital. You do have to, in the middle, go through our entire credit risk analysis process. That is where we sort of partner as institutions, Equity Bank, with Equity Group Foundation, and make a call in the middle for who then is eligible through our through our concessional capital programs. Finally, from there, when you can graduate, we can really see the opportunity. You are far past the profitability mark. You're meeting key financial metrics on a quarterly and annual basis. We believe and we understand the business model that's driving your growth, and we have confidence in the market to be able to sustain the growth that we together are looking at on the commercial side. So really different conversations actually along that journey. We have a fantastic track record of bringing people from really just being financially included all the way to scaling, with scale-ups, massive regional ventures. But it is a long journey. It's not a short one. There's no skipping the line for entrepreneurs. And it is, really at the discretion of credit teams, loan officers, and a variety of professionals who really do have your best interests in mind.
Right. Sounds like our health entrepreneurs here have a lot to work on if they want to get some funding from you, Johnny. But yeah, to you now, when we think impact investing, it means different things to different people. For some people, it means free money.
What it is not.
It's not free money. What does impact investment or investing mean for your organization, and how does it determine what you support?
Thank you very much. So I like how you started when you said to some people it means free money. That is exactly what it is not. So it's impact investment. So long as there's investment, people expect a return. So impact investors are not philanthropists who just give out money. Impact investing is investing for both profit and impact. So historically, the business world has been concerned, or investors have been concerned with just profit.
Right.
We just talked about the bottom line, how much profit have you made, etc. Increasingly, we've become concerned about sustainability because we only have one world to live in. Look at what happened with the floods we have all witnessed, etc. So environmental sustainability, climate issues are a concern. We are concerned about social stuff. We must create jobs. He mentioned about people's health and well-being and livelihood, etc.
Right.
So investors are increasingly more concerned about not just the financial, bottom line, how much money have we made, but how is this venture creating jobs?
Right.
How is this venture increasing inclusion, gender equality, gender equity, etc. The impact on environment, minimizing carbon footprint. It used to be a nice to have when it started, the whole conversation about SDGs and all of that. It's increasingly becoming more like a requirement. Lately, even accounting, I'm actually an accountant by training, where I've come from, who has moved into partnerships. And now we've seen IFRS talking about sustainability standards they've introduced, etc. So increasingly, it's become a concern, even being mainstreamed into financial decision making.
So we had a venture earlier. Was it EcoPads? She's still in the room. We had a venture. Yes, there you are. We had a venture, EcoPads, that's trying to make pads from sustainable from sustainable materials, right? Will such a venture be in line to receive impact investment, and what does she need to have in place to qualify.
Thank you very much. What's the name of the business again?
Well, what's Echo Diaper?
Echo Diaper.
Forgive me, guys.
Echo Diaper. Yeah, sounds interesting. Yeah, so absolutely, this is something an impact investor will be interested in because there's sustainability, all of that. The problem you are trying to solve is perhaps the current diapers are not biodegradable, so maybe you just throw them, it takes a long time to break down, etc. But because we are talking to an impact investor, they are an investor, but they are an impact investor. So they are interested in looking at where are you in your business journey? Are you at an idea stage? You know, as for ideas, there are a lot of people who have ideas. You know, ideation.
Right.
Do you have a prototype? Where are you in the journey? You heard about John saying that you can't skip
The process.
You can't skip the process.
Yeah.
And there are different investors who will be interested in you at different points. Honestly, when you are the experimenting stage, because you have to do some experimentation, try out different things and the rest like that. A lot of it will be your own resources and stuff, what people call sweat equity.
Yeah.
Your own resources. In fact, some people also refer to the 3 Fs. I don't know if you've heard about the 3
Tell
Fs.
me, please.
Okay. So very early in the process, the 3 Fs say friends, family, and fools.
Wow.
Friends, family, and fools, yes. Because at that stage, you are unproven. You don't have any customers. Your market has not been tested. It's not been established. You have revenue. So there's a lot we don't know. Like I said, ideas are really, really nice. But you know, it's a different thing. One thing to have an idea, and it's another thing to develop a product and go into the market and test it and find out whether someone is actually willing to spend money to buy. So at that stage, that is it. So then you move out of that stage. At that testing stage, you may be lucky to get a grant, like John was saying. Right. If you have a philanthropist who is interested, then they could give you grants. Play a role in terms of testing, you know, early product development. There are some entrepreneurs who live on grants. You know, it's like they never move out of the grant stage, but it's supposed to be a temporary stage. They take one grant, and before you realize, they're on a different grant, and it's a different grant. You wonder whether it is a business.
Yep.
Are you doing business or are you running an NGO?
Right.
Because, you know, what are you doing?
Yeah.
And I think they have a term for it. They call it grantpreneurs.
Grantpreneurs.
Exactly. So grants are for a season. It's supposed to help you figure things out. So you do that, you figure things out. Then you have to sell. So you have to have customers. You have to have that revenue, early revenue, coming in. In fact, even in our part of the world, people want to see profitability, early profitability, etc. And as you are doing that, you think about your systems and structures. Have you registered your business? What's the governance like? Who is advising you? Do you have records? Do you have records when you start selling? So that if I ask you for your track record, your history, can you pull out your financials? And then show me, and then all this. Before impact investors come in, to be honest,
right.
Before the banks and even people like John, and that's the banking side,
right.
Commercial banks and impact investors come in because, mind you, and it's important we understand investors. People think investors are very hard, they don't want to give out money, but they've taken other people's money. You see, investors have taken other people's money. So if it's venture capital and private equity like that, sometimes it's pension money. Other people's money, and they are taking a risk with that money. So what an investor does not want to do is to lose
that money. Right.
So it's important that those systems, those structures, you need a track record.
So it's sounding to me like even with whether it's venture capital, whether it's private equity or impact investment, entrepreneurs need to have their affairs in order. You need to have gone through a process. You need to have your records. You should be able to prove that it's worth the investor committing to you. So I just want us to have that in mind, right, as we're building, that even with grants, and I guess I can speak to that because we run a Center for Entrepreneurship at Ashesi University, and we give out grants. I'm known as being tough because even with grant funding, I want to see the milestones. I want to see that you've tested, you've done some prototype development, you have data to show me, right? And then you convince me that I can give you a little more. So let's bear that in mind as we're building. Johnny, I want to come back to you here. So we see that health ventures and really health infrastructure in Africa is very thin. We operate in a very under-resourced environment, right? So bearing this in mind, I'm curious about how you think about risk and return differently from how you would think about a venture in another ecosystem, for example, where it's more structured. If you put money in, you're getting your money back out within a certain period of time. How do you consider this? And maybe let's make it less theoretical and more practical. I'll give you, there's a venture Bloodline, which is a health logistics business, right? And they're trying to make sure that they can ship blood to various hospitals, and they're putting cold chain logistics system in place. If a venture like that came to you and said, I'm operating in Ghana, infrastructure is not pretty strong, but I need investments, what would be the first 3 questions you ask them, and how would you tell them, well, here's how I'm thinking about trade-off, risk and reward, outside of how we do it generally?
Excellent questions, and I love the example because it is a real tangible that would be important to a group like ours. And I say that because it's probably for a different reason than people might initially assume. When you are part of a supply chain, I'm really interested in what your company is going to be able to do to build out an entire ecosystem of business opportunities. So who else who is adjacent to you, what other companies in your orbit are you actually also empowering at the same time? So my questions would have everything to do, honestly, with really like, how is this going to support a payments ecosystem? We are a payments company at the end of the day. We lend in this space. How could the financial services and tools that we offer and want to innovate around, how could those be used within this ecosystem, not just to support your business, but how could this actually support, a couple dozen businesses around you so that you're all strengthened together? That is going to give me confidence that, one, this is sustainable in terms of a, real world supply chain player. But then I also want to know that you're going to add value to me as an ecosystem developer on the payments front, on the lending front, because my desire is actually at the end of the day, not just to get a return on your business, but I actually want to open up my loan portfolio. I want to dig into your ecosystem, and I want to be able to lend into that ecosystem. So how can you help me as well grow my business by opening up multiple opportunities for the bank all at once? And I promise you, if you have a good answer for that, that gets the attention of executives right away.
Sounds great. I'm going to pause here and ask maybe just 2 questions from the audience before we wrap this up. So do we have any questions for our investors here? No? Yes? You have a question? Okay. I'm going to keep going with our questions. Is there any such thing as the wrong type of financing or funds for a health venture? What is a wrong type of financing for a health venture? And at what stage would a certain type of fund vehicle be wrong for health ventures? Maybe Al, you can take that.
Yeah. Oh, absolutely. I believe that there is. So very early on, and this does not just apply to health ventures, it will apply to other ventures as well. If it's very early on in the business and you don't have steady cash flows, why do you want to take a loan? Yeah.
Right.
Why would you want to take a loan and go and borrow? Unless you are taking a loan from your family member. Even that one, you should be careful. You should be careful unless it's from your brother or sister. You should be careful.
Right.
So if they can raise, but why would you want to take a loan? Because loans mean that you have to have repayments. At the point there's interest. Yeah. So we talk about patient capital. So capital must be stage appropriate. You should know where you are and realize that, okay, maybe at this stage, what is actually the best for me is I just have to hustle. That's the truth. At certain stage, entrepreneurship, at certain stages, you just have to hustle it and get it over with. At a certain stage, you say, okay, you know what? I can actually get this amount, but from very close family members. We call something angel investing. They are angel investors who are not your family members, but are willing to take on a higher risk and then invest. But even they, like I said, they are angel investors. They are not angels. They are angel investors. So it means that they will invest with the expectation that they get returns, and they can give you patient capital because it will be equity for a while, etc. Allow you to grow, So an entrepreneur, especially at an early stage, needs capital that allows them to grow.
Right. Okay. Johnny, I'm come to you with this question. What are the most common mistakes you see health founders make when they approach investors, and how could they have avoided them? Have you supported health founders? First off, I think you mentioned that you did.
Yes.
Okay.
So I actually think the answer to this question and your last question are very much related. And so it's all about the wrong capital, but it's about the wrong kinds of partners as well. And we pride ourselves at Equity as being sort of the good guys at the table in any conversation. But let me just be frank about it. These are actually shark-infested waters.
Yep.
There are investors who do not have your best interests in mind, and they are looking for opportunities to be able to take ownership over the IP of the company that you're trying to build. So when you're looking to select partners, especially in health, which are, I would say, like software companies, capital intensive ventures, you may get a quick, easy dollar from an investor who may already realize that you don't have the financials or the unit economics worked out yet to be able to survive on an aggressive growth timeline, a horizon. And so the return architecture, if that isn't aligned to your own best interests, you're actually at risk of the company eventually folding or being taken into administration, and your investors may have the ability to take your IP with them. Right. When you lose money as an entrepreneur and you lose money for your investors, it's not just the end of the conversation and you walk away from the table and that's that. They may actually walk away with your ideas. And in fact, what I see over and over again in our markets on the continent is that founders choose the wrong partners who are eager to basically buy your brilliant idea for pennies on the dollar. And there are sharks out there, and we know who they are, and we talk to each other as investors. So I think working on the relationship with your investors is really important as well, to be able to clue you in and to give you the context and the depth perception in the market for who's really there to support you and who's maybe there actually just to take advantage of your fledgling idea as it's just getting off the ground and it's its most vulnerable.
So it sounds like all of us here as ecosystem partners, Johnny, maybe you need to run us through what to watch out for and who to watch out for, so we can guide our ventures and entrepreneurs as they go out to raise funding. I'm just going to ask for your final words because we've come to the end of this panel session. If there's one thing that you want our entrepreneurs here to take away from this conversation, what would be that one thing that you want African-based founders to walk away knowing about accessing capital for their various ventures? Maybe Johnny, you go, and then Yao closes us out with his answer. One thing, if they don't take anything from you at all.
I think for me, it is because this space is heating up rapidly. Entrepreneurs, you must understand you have more leverage than maybe you think you do. You do not have to take a bad deal, and you can negotiate the terms of any arrangement, and you can walk away unless that deal is really, not serving you. You need this to work out for you. You're potentially spending the next 10 years of your life working on a solution and scaling a viable business. But you have the power right now to set the terms because the capital is there and is interested. Health is not going away as an issue on this continent, and you have leverage in this conversation. You need to get good at negotiating with your counterparts earlier and sooner rather than later because you do have leverage.
Thank you. Yao, what about you?
Yeah, I think as he has just so excellently captured that there are opportunities out there for financing. When you speak to investors, when you speak to businesses, they'll tell you it's so hard to find capital. We can't find capital. It's interesting. We have over 80 investors on Deal Source Africa. These are mostly private funds, so venture capital, private equity. And when you speak to them, they'll tell you, oh, it's so hard to find good businesses. It's so hard to find because they are sitting on all these millions of dollars, and they'll tell you, we can't find pipeline, we can't find businesses to invest in. So what's happening? So it tells you that for businesses that do the work, make sure that they're actually meeting a market need, that they actually have customers. There's revenue, and you can see that the revenue is growing. There's potential for growth. They are keeping good records. Systems are in place like that. One of the best things that can happen to you as an entrepreneur is when investors actually come looking for you. So he was talking about, leverage.
Yeah.
And the experience from Deal Source, so the lead for Deal Source Africa was actually supposed to sit. They are not here because they're actually hosting a virtual deal room. So they do this from time to time, where they curate entrepreneurs and they curate with investors and then match them. Entrepreneurs don't pay anything. Investors don't pay anything. It's just an opportunity for you to meet, and then you can discuss if there's follow-on interest.
Right.
And what they keep on telling me is the investors tend to congregate. They all want a particular kind of business, because when you see a good business, you see that everyone wants to invest, and everyone leaves all the other businesses and they are just interested. Yeah, so I think we should be patient and spend time building businesses that will be attractive. And when you get to a certain point, you actually realize that investors are the ones who actually be chasing you, because there is capital.
All right. Thank you. So there is capital, guys. We've got to work on building the venture and making it attractive, and to know that you have leverage and to learn how to negotiate, right? Thank you so much, Johnny. Thank you, Yao. This was incredible. Have a great rest of your day. Thank you. I hope you enjoyed this.
Thanks, everyone.
Okay. All right. Thank you.
Thank you once again to our panelists for a truly insightful discussion. One more time, shall we give them a round of applause, ladies and gentlemen? As we conclude the formal sessions for day one of the Health Innovation Festival 2026, we now have the opportunity to take our learnings from beyond the conference room and experience innovation in action. This afternoon's site visits will give us a closer look at organizations that are helping shape Africa's innovation ecosystem. Whether you are visiting Yamachi Biotech or Ashesi University, we encourage you to remain curious, ask questions, and make the most of your experiences. Just a quick announcement. For participants originally assigned to the Orem Institute site visit, kindly see one of our volunteers or any of our volunteers who will assist you with your reassignment to Ashesi University. Now, moving on, I would like to say, before we depart, I'd like to thank all of our speakers, mentors, partners, volunteers, and all of the participants for making today such a rich and engaging experience. Round of applause for them, ladies and gentlemen. Special thanks go out to Ashesi University and KNUST for putting this together, and also MasterCard Foundation as our partners. Also, special thanks will go out to Moi University, Amref University, and Amref Health Africa. Also, University of Cape Town, Addis Ababa University, University of Toronto, Africa Leadership University, and like I already mentioned, MasterCard Foundation is a funding partner, and of course, the Africa Health Collaborative Secretariat. Round of applause for all of these people, ladies and gentlemen. And I just want to say, from the keynote address to the breakout sessions to the investment conversations, talk about networking opportunities, today has been a very, very, very powerful reminder of what is possible when innovators, researchers, entrepreneurs, and ecosystem builders come together around a shared purpose. I'm really, really happy about what we've been able to achieve today. Tomorrow, we continue the journey with storytelling and pitch practice workshops, entrepreneurship-led conversations, business coaching clinics, and practical sessions designed to move ideas closer to impact. At this time, please proceed to your assigned site visits and follow the directions of our volunteers. Thank you once again for a very fantastic day one. Travel safely, enjoy the remainder of your evening and after your site visits, and we look forward to welcoming you back tomorrow for day 2 of the Health Innovation Festival 2026. Ladies and gentlemen, my name is Mr. Day, or David Day Alko, and I've been your MC for today. Thank you. See you tomorrow.